So all I need is money from the bank to build a rocket. And then the moon is ours.
Wow. Well, very nice presentation. I'd like to see this shrink ray.
Absolutely. Will do. As soon as I have it.
You don't have it. And yet you have the audacity to ask the bank for money.
Apparently.
You have any idea of the capital that this bank has invested in you, crew? With far too few of your sinister plots actually turning a profit. How can I put it? Let's say this apple is you. If we don't start getting our money back. Get the picture? Hello and welcome back to Understanding Crypto. My name is Herve, and every other day here I try to decipher cryptocurrency in the easiest way possible on the internet. We cover things like predictive analysis, research and tutorials to help guide you through this treacherous marketplace. I mean, you don't want to be walking around in this crazy market without any type of guiding compass, yeah? So if you're interested in that type of content, be sure to click that like button and follow the page or subscribe to the channel so that you don't get to miss out on these value-packed videos. So earlier on, I posted a video on TikTok, and I find that a lot of you actually liked it. So I just thought that I should come and explain a bit of the idea here. And by the end of this video, I think you will really understand, how my thought process usually works. I usually say that, it's not just about forecasting price. Always remember that there are only two sides. It's not like we have 10 sides and you'd have to be some type of genius, to actually depict where price could go. If you find people online saying it's going to go up and others saying it's going to go down, it's only two ways. You could have no idea about what crypto is and just say it's going to go up and it goes up, but that does not mean that you are, you know what you're talking about. You understand, yeah? So it's very important to understand the strategy. Why do you think it's going to go up? Or why do you think it's going to go down? That's what is important, not just nailing the target. I mean, if you go on the street and ask anybody, what do you think Bitcoin will do, up or down? It's only two, yeah? Everybody could get it right. If they all set up and it went up, well, they were all right. But doesn't mean that they know what they are talking about. So the strategy is very important. Now, this video may be long, but you will learn a lot from this video. So just stick with me here. And yes, you don't want to miss this video, folks, because you will come back after to ask me questions on things that I already answered in this particular video. Again, this is a very important video, so do not go anywhere. So I posted a video earlier on TikTok asking people what the hell they see here. Now, some of them may have just said in their own minds that, well, I see candles. Some would have thought that, oh, I see some yellow lines, and they are actually looking at liquidity up here. But then I specified that you look at these candles. What are these candles forming right here? And if you have been following this channel, then you will be able to quickly identify some key things right here. And let's just point that out, yeah? We see a move to the upside. This move right here. It heads up like so, comes back to the downside, goes again to the upside, and then it falls to the downside. Now notice that it falls and ends here, goes back up, falls again, and then goes back up. But this time around, it goes back to this range right here. So if you look at this particular structure, it actually looks like so. This video might be long, so yeah, just get some popcorn and watch this till the very end. If there's any video that I've ever wanted you to really watch and understand, this should be that one. All right, so you have A, B, C, like so. Yes? Now, this right here is that ABC. But then this ABC is actually inside of a single A wave. So this is that single A wave that looks like so. This single A wave. So this is the A, yeah? And this move back to the upside, so this entire move down here, which is A, B, C, is this ABC that we see here. And then we say that the ABC is actually a single A wave. You can think of it as these nesting dolls like so. This actually makes it, a bit more understandable, because it's like a wave inside of a wave, like something inside of something. Yeah, these nesting dolls. It helps to understand exactly how these waves work. So we have this right here, A, B, C, A, B, C, which is actually part of a single A wave. So we now have B right here. This B is actually this retracement back up like so. Now, after that B, what do we have? We have C. And as we said in our Elliott Wave video, I'll leave that video by the end of this video, we said that C is usually violent. It's usually just crazy. And people say, oh, crypto crashed, crypto crashed. Yeah, that's usually C. When you hear that we are in some monstrous rally, or, you keep getting updates on your phone or, on your exchanges and stuff that this has pumped by 20%, this has pumped by 50%. Yeah, that's usually the third wave, which is equivalent to this C wave correction right here. Now, after that C, what do we have? We have D, which is this D right here. So after this B right here, you have C. This is C. The move back up is D. Now, after this move back up to D, we have E. So after the move back up to D right here, we have E somewhere around here. If we put that out like so, and let's put this in yellow, you will see it looking like so. Yeah. So this formation keeps on happening. Now, after this, what's the next target? After this E, what's the next target for this? The target is AB. So after this E right here, you'd expect price to do something like so and do something like so, coming back to AB right here, coming back to this region right here. Now, let's just put this in red so that, we all understand exactly what we are dealing with here. So this is the same type of situation that we had here. So you'd see that this looks very similar to this type of formation. Now, after this, you could still have the same thing happening again. So let's just clone this right here, and it will look like so. And the same thing could continue again over and over and over. The same thing could continue. So this is what characterizes what you will now draw lines like so and say, downward trend or bull flag. It usually would now be like so. But as somebody who understands this, you now will look at this and understand exactly what's actually happening. Now, if we go to Mr. BTC, you will see these things happening, folks. Let's go to the weekly time frame, for example. Really, when I look back at this, I am filled with regrets because I read it differently at the time. I would have called this exact bottom right here, but I read it differently. So yeah, that's on me. But yeah, if you look here, you will see the same thing happening on the weekly time frame. So you have the same type of correction right here. Let's take that ABC. So ABC, same this type of A wave correction right here, same this ABC. Yes, then we know that this ABC is inside of a ginormous A wave. After that A wave, we have the B, C, D, E. Yeah, so if we come now to the weekly time frame right here, let's expand this chart. All right, so we have this right here. This is the ABC. Yes, now where is the A, B, C, D, E? Let's take A, B, C, D, E right here. A, B, C, D, E. You'd call this the bear market because it is on the weekly time frame. But then what we have to understand here is the same correction that we see here on the weekly time frame happens even on the daily time frame. The exact same thing. As you zoom in, you will continuously see these same things occurring on the lower time frames as you zoom into them. Now, let's zoom in right here on the daily time frame. We'll just zoom in here because, and after zooming in, we will again zoom out to see how the bull market could actually come. Now, we go now to the daily time frame. You see the same thing happening, yeah? And I already mapped this out. So you have A, B, C, this big move to the downside, D, E. Same thing here, A, B, C, D, E. Now, sometimes the B may not go as high. Sometimes it's never exactly the same, but it's the same principle behind all of this. And now I suspect anyways that we are in D, which is why yesterday I was telling you that I think we will go back up to somewhere around 60 to 61.6. Now, you must use this with Fibonacci. Yeah, you must use this with Fibonacci. If you don't use it with Fibonacci, then you will not know what exact price that particular wave could lead to. And we will come to how you apply Fibonacci with these waves in a minute. Yesterday, I was saying that we could most likely head up to 60 to 61. Now, 60 to 61 will mean that Mr. BTC would have filled the CME gap now, won't it? 60 to 61, let's go here to 60 to 60. All right, we are already filling the gap. Yeah, this is the CME gap that we've been talking about. We did say that Mr. BTC came down here, or say BTC dropped to the downside, which was after the weekend. So we could not have filled the gap, but we will eventually go back there, and that zone will act like a magnet. So 60 to 61, Mr. BTC can very well go up there, then fill this gap. We will see that the gap right here on the 4-hourly time frame extends as high as 62. It is unclear whether it's going to go as high as that, but there's a good chance that we go up here, which is why I'm not in any shorts. Yeah, I'm not going to short this thing. Why? Because sometimes you don't get the D and E. Sometimes you bottom at C. So shorting here is, yeah, you are playing with death. Yeah, because it could bottom and then just take you out and go straight up and you lose money, while you could have just held on and made money on your spot positions if it continued to go up. Now, if you really believe that there's an incoming bull market, then it's a bit more on the stupid end of things to be going short. Except you are scalping, or, you know, because I usually think in terms of swing trading. Like, I hold a position for some time. I don't, you know, just think about quick trades and stuff. I do them. I have analysts in my group that help me with that, but usually that's not my gig. So we could go ahead and fill this gap right here, but we have to know that there is a chance we go for E. E will be this type of move. You see this move to the upside, and then we dump back like so. Yes, same thing happening here. Move to the upside, then dump back down like so. This particular level right here, this particular level is similar to this one, and it's also similar to this one. Now, if we look at this formation, the problem now would arise: when does it finally go up and not come back down? If the target for every successive E is AB, then when would it be time for it to actually go straight up and not come back again for another move to the downside? Because this right here is true both for up and down. So this same formation that we see right here, this same move to the downside like so, would be true even if the chart was inverted like so. So it's the same type of thing. This now will be the first wave, this would be the second, this would be the third, this would be the fourth, and this would be the fifth. So it's true both for up and down, and you should be inverting your charts each time you find yourself having a bias. And in most of them, you'd always have some move and a retracement like these right here. So a move up like so, retracement, another move, move up like so, retracement, and another move. So it's true both for up and down, and it means that the crypto markets have not topped. Why, you might ask? Because this right here is the A. So we have ABC, this is B, which means this entire ABC is still just the first wave. All right, so ABC, then we go now for here. So this is all A. Let's put this in green so that when we turn it around, you easily get it. All right, so let's put this in A. So this is B. This is C. You see the C, yes? This right here, if we extend into 45, that will still just be D. That would be D. Then we go above to put E. Now, we don't know if we are actually going to go to 45. Remember, I'm not saying we must go to 45. Sometimes you will not have that E or a D. Sometimes you bottom at C. So we see that this can prove to us that we have not topped. I'd be very surprised if the markets have topped and we are going to hell. I'd be extremely surprised. I'd be very, very surprised. So we need to see this E, but because markets go up more than they go down, This is a general principle, by the way. If you invest in an asset, the most you can lose is 100%. You cannot be losing 200%. You cannot lose what you do not have, yeah? So the most you can lose is 100%. You can gain 10,000%, but you cannot lose more than 100%. So generally, markets go up more than they go down. That's simply the logic. So because that is the case, it is very difficult to know where this E right here in our inverted chart actually leads. It could lead to maybe a 77, maybe 83, and I have some levels there at 83, maybe 105, maybe 170, or even higher. But that would be the E in this particular example. So to answer the question of how we know where the waves end, like if we repeat this, it will never go up. Yeah, if we take this right here and put it again here, and take this right here and put it again here, you will always be targeting the ABs. So you are going down indefinitely. You are going down like so. So when do we get to break the trend to the upside and actually go up for good? To know that, you then use Fibonacci. That's where Fibonacci now comes in. You have to use the Fibonacci on the higher time frames. And what's the biggest time frame on BTC that actually matters? Is the weekly. BTC is too young to be using its monthly time frame. It's too young. You'd only use the monthly time frame on things like the S&P, and that could still be an issue because the weekly will tell you things that happen in the next coming months or so. Yeah, and that could take 6 months. Weekly time frame analysis. Let's just make a quick example here. So you see this right here? If you looked at this, and I gave you this example some time ago, that if you looked at this and called it a cup and handle, and then you took your lines from here and you said it's going to go to 58K. Well, it's going to take a very long time to reach there. It's going to take, let's see, and this is on the weekly time frame. Let's say you buy here. You buy here and that thing drops. First of all, it drops by about, you buy here and it drops by 18%. At this moment, everybody is saying, you lost. You lost, you were a fool, you shouldn't have bought. It's never going to go back up. And then after 252 days, and this is about 8 months actually. So it would have taken you 8 months for your prediction to come true because you're looking at it on the weekly time frame. But as you zoom into the lower time frames, you start to get targets that can happen maybe next week. And as you zoom in lower, you get targets that can happen maybe the same day. And as you go even lower, you get targets that can happen in the next hour. If you go even lower, you will get targets that can happen in the next couple of minutes. So you see the difference between time frame, folks. So that's why now, if we want to catch where the entire trend of this type of formation is going to reverse to the upside, we have to use that weekly time frame. So in the ABC wave type correction, or maybe the 1, 2, 3, 4, 5 type move to the upside, to get a target of 3 or C or E, you have to look at the ABC. This ABC right here tells you where the target of C or E could be. How do you do that? The length of this A right here, remember that inside of this A wave, you have the ABC, yeah? So the length of this ABC right here should tell you where the C or E wave could come in. This length right here, if you times it by 1.618 or 2.618, it should give you the C or the E wave. Usually that 1.618 or 2.618 will be the bottom. Now, we are using, probabilities here. There's no way to know. I'm not some type of magician or something. There's no way to know. But given my back test, that's where the bottom usually is. And the 2.618 is 2 times, and it's actually 2 times the 1.618, which is more powerful than the 1.618. So basically, you have something that looks like so. If you take this from here to here, let's take that 2.618, 1.618, 0.786. With this strategy, you only need these. So 0.786, 1.618, 2.618, 3. right there, the 3 fib. This is the weekly time frame, yeah? So if we take from here and we go like so, it should give us E. That E now comes in at the 2.618 right here at 45. So when price comes now to this E, or if it does come down to this E, note that it's not always guaranteed. Yeah, I'm not saying it must go there, but ideally this is how the strategy works. Sometimes you'd have it front run and it will not come there, but this is just basically what the strategy would depict. If it does come into this zone right here, it ends the entire move to the downside. So it ends this sequence of lower highs and lower highs and lower highs and lower highs. And then from there, the next time it goes back up, which would be, say, the next time it goes back up from here, it's not going to stop here. Most likely, you'd have something that looks like so. Then it breaks out. Some traders now would look at this and call this that it has been a descending wedge and it broke out of the wedge. But you have a better understanding of what actually happened. After now this move to the downside, what then are we targeting? We are now targeting this entire wave sequence to the upside. So this is the bull market sequence, but if you zoom in, you are now charting this particular section right here. So if we were to use the waves to the upside, yeah, we chart it out like so. Since it's supposed to be a bull market, and as we said, prices would normally go higher than they will go down, I don't use the regular Fibonacci. If you use the regular Fibonacci retracement tool right here, it will not give you these targets to the upside. So I use the trend-based Fib extension. All right, so we take from the bottom right here, take it to this B right here, and then we bring it back down to this B wave down here. That should be giving us the 1.618 at the top right there. And I saw this some time ago. If you remember, I sent you a chart saying that, maybe it does go back down there, but even I wasn't confident about it, to be honest. But yeah, by the analysis, price is not always ideal. It must not follow the strategy, you know, but ideally it comes back down to here, which will be the 0.786. Now, after 0.786, you are targeting 2.618. That's why it could go to 100K after this move to the downside. And even at that, you'd see that we had 1, 2, 3. That's the third wave. This correction now is actually the fourth wave. All of this that we've been talking about inside here is actually the fourth wave. This right here is actually the third wave. And this right here is the second wave. This right here is the first wave. You now understand why you shouldn't really panic when the markets drop. Instead, think of what wave or what type of move could we be in. If you hear that the markets dropped, in your mind, what you should be thinking is, which of these are we in? Yeah, if we are still in this one, your overall stance could be potentially bearish there. Most people would be thinking that it's just a retest for another move to the upside. When it's this one already, when it's this wave C already, most people will think it's done. When it goes back to the upside like so, they become hopeful. If it does again a move to the downside like so, which will be E, they think it's really done, it's now going to zero. No, that's the time when it's actually going to rip up. So many people think the markets have, it's done, yeah? But I don't think so. So generally, I'm just looking for something that looks like this. One thing we could take from this video, folks, is if the higher time frames are still bullish, like this one right here, this is still bullish, yeah? We have 1, 2, 3, 4. This is 3, and I'd bet anything on this that this is 3. And this must be 4. And 5 is still yet to come. Again, we don't know how high 5 could go. Maybe 77, 83, 104 to 105, 170. Because markets go up more than they go down, it could go way higher. And that would be the extended 5. But basically, that's the thing. So if the higher time frames are still bullish like so, then if I'm looking for a swing position, basically I'd be looking for a position to get in for the longing side, not for shorting. Here, on the other hand, if we were in this type of drop like so we had this A, B, C right here, I'm actually proud that I was calling for sales around this region right here. When BTC dropped down to 34K, I made a video saying that there's a strong chance BTC will rally next week, so it should be a time to DCA or to buy the dip or to make a quick buck. And then I called BTC sale quite literally at the top right here, quite literally here on my TikTok. So the higher time frames were still bearish, and in that situation you'd want to be looking for positions to short. Hopefully you understand, folks. Use this as a way to remember this strategy and stuff, and hopefully this information helps you. Until the next one, stay safe.